Cryptocurrency trading shines brightly. It calls to many. It promises vast fortunes quickly. Stories of sudden wealth spread like wildfire. Bitcoin, Ethereum, new coins appear daily. Each one whispers of potential. The dream is powerful. Financial freedom seems within reach. Technology offers a new path. This path seems paved with digital gold. Many are eager to walk it. The allure is understandable. We hear tales of early adopters. They bought low, they sold high, they became millionaires overnight. Social media amplifies these stories. Influencers showcase lavish lifestyles. They claim crypto funded it all. This creates a powerful illusion. It suggests success is easy. It implies anyone can achieve it. The fear of missing out grows strong. However, there is another side to this coin. The reality can be harsh. For every success story, many failures exist. Let us explore why so many falter. A primary reason for failure is simple. It is a lack of education. Many traders enter the market blind. They do not understand the technology. They do not grasp blockchain fundamentals. They buy assets they know little about. They invest based on hype. Or they follow a friend's tip. This is like sailing without a map, or without knowing how to read the stars. Disaster is almost certain. Emotions then take the helm. Greed is a powerful force. Fear is its equally powerful twin. When prices rise, greed whispers, buy more, go all in. When prices fall, fear screams, sell now, get out before you lose everything. Decisions made from emotion are rarely good. They lead to buying at the peak. They cause selling at the bottom. This is a cycle of loss. A sound strategy is abandoned for panic. The crypto market itself is a wild beast. Its volatility is legendary. Prices can soar by incredible amounts. They can also plummet just as fast. New traders are often unprepared for this. They see numbers go up, they feel euphoric. Then a sudden crash occurs. Vigilance is essential for survival. One of the most common traps is FOMO. This means fear of missing out. A coin suddenly pumps. Its price shoots up dramatically. Everyone online is talking about it. You see screenshots of huge profits. You feel a desperate urge to buy. You don't want to miss the rocket ship. So you buy without thinking. You buy at the top, then the price crashes. This is FOMO in action. It is driven by herd mentality, not logic. Panic selling is the opposite error. It is equally destructive. The market turns red. Prices start to fall. Fear grips your heart. You see your investment shrinking. You imagine it going to zero. So, you sell everything. You sell in a panic. You lock in your losses. Often the market recovers soon after, but you are already out. You sold at the worst possible time. This is reacting to FUD, fear, uncertainty, and doubt. Another dangerous practice is over-leveraging. Some platforms allow you to trade with borrowed money. This is called leverage or margin trading. It magnifies your potential profits, but it also magnifies your losses. Section 4. Charting a different course. Habits of successful navigators. Successful traders operate differently. Their foundation is continuous learning. They dedicate time to research. They study blockchain technology. They analyze specific projects. They read white papers carefully. They scrutinize the team behind a coin. They understand tokenomics, the economics of a token. They want to know the why and how. They do not invest based on hype alone. Knowledge is their compass. A clear trading plan is essential. Successful traders define their strategy. They set specific entry points. They determine exit points for profits. They also set stop losses to limit potential damage. Most importantly, they stick to their plan. Discipline is paramount. They do not let emotions derail their strategy. The plan is their anchor in stormy seas. It guides their actions. It prevents impulsive decisions. Risk management is not an afterthought. It is central to their approach. They only invest what they can truly afford to lose. This amount is different for everyone. Losing it should not devastate their financial life. Section 5. Weathering the storm, understanding market signals and volatility. Understanding market signals is vital. Technical analysis, or TA, is one tool. It involves studying price charts. Traders look for patterns. They identify trends. They try to find support levels, where prices might stop falling. They look for resistance levels, where prices might struggle to rise. Indicators like moving averages or RSI can provide clues. TA is not a crystal ball, but it can help in assessing probabilities. It helps to time entries and exits. Fundamental analysis, or FA, is equally important. This looks beyond the charts. It assesses the intrinsic value of a project. What problem does the cryptocurrency solve? Does it have real-world utility? Is the development team strong and experienced? Is there an active and growing community? What is its adoption rate? These questions help determine long-term potential. A strong project is more likely to survive. It is more likely to thrive over time. Markets move in cycles. This is true for crypto too. There are bull markets where prices trend upwards for extended periods. Optimism is high. There are bear markets where prices trend downwards. Pessimism prevails. Recognizing these cycles is key. Section 6. Steering towards success. Practical strategies for aspiring traders. If you are new, start small. Very small. Consider paper trading first. This means practicing with fake money. Many platforms offer this feature. It allows you to learn the mechanics. You can test your strategies. You can make mistakes without real financial loss. When you do use real money, begin with a tiny amount. An amount you are genuinely prepared to lose. Experience is a valuable teacher, but tuition should be affordable. Prioritize education above all else. Before you invest a single dollar, invest your time. Read books about Bitcoin and blockchain, take reputable online courses, follow knowledgeable, non-hype-driven educators. Understand the technology first, then learn about market dynamics. Learn about risk management. The more you know, the better your decisions will be. Ignorance is incredibly expensive in these markets. Knowledge is your best defense. Security is not optional, it is paramount. Protect your digital assets fiercely. Understand how private keys work. Never share them with anyone.